2024, sure, there'll be some ups and downs, for sure. But it should be liquidity driven, business cycle driven, inflation falling, unemployment a little bit higher, rates coming lower, stimulus should be on its way. More cowbell is the way of the world, and it's the way of the world since 2008, and it will continue as so. It suggests that Ethereum may have a really good first half of 2024. The target from using the liquidity indicator would be about 5,300. It's directionally, we should be coming to all-time highs in Ethereum in the first half of 2024.
Raoul, a prominent macro guru and the founder of Real Vision, has consistently upheld contrarian macro views over the past year. Amid widespread concerns of a severe recession earlier this year due to fears of the Federal Reserve's unprecedented rate hikes breaking the economy, Powell remained steadfast in his contrarian outlook. He focused on what he deems the bigger picture, highlighting the perfect correlation he observes between the Fed's balance sheet and the appreciation in asset prices across the board. According to Powell, understanding this correlation is key to successful investing, as he asserts that business cycles are almost perfectly correlated with central bank activities. Powell dismisses concerns about recessions, inflations, deflations, and other turns in the business cycle, stating that they don't matter as long as central banks, including the Fed, continue printing money. He predicts a steady rise in asset prices, with two assets, crypto and technology, identified by him as not just matching but significantly outperforming the increase in the Fed's balance sheet. Powell, like many in the digital asset space, expresses optimism about the 2024 to 2025 crypto bull market. Over the next 12 to 18 months, he anticipates a substantial increase in the prices of cryptocurrencies and digital assets, starting with Ethereum, which he believes is poised to hit a new all-time high of $5,300 per token. In his latest Crypto and Macro Masterclass, Powell comprehensively analyzes leading macro indicators and outlines his expectations for their impact on the market in 2024 and beyond. The upcoming clips will provide insights from Powell's in-depth analysis.
Firstly, my macro outlook always requires a business cycle framework, because that's really what gives us the juice in the trade. And I'll come on to the secular trends later because they're important too. But the business cycle is really the ups and downs of the economy. So firstly, let's deal with where we are today. Today, the present day, here's the business cycle dominoes that help us understand that present day is where the ISM is today, which is below 50, so we're in weak territory, but not super weak. I thought we'd get a recession. I thought it'd be a mild recession like 1990. I still think we may get a recession. We may skirt it. Doesn't really matter, because as this chart shows, in that kind of gold box, risk assets are way ahead of ISM. They live in the future. The central banks, well, they live in the past. Data they're still looking at is lagging. And so they lag by 6 to 8 months, which is why they're still at peak tightening while the economy is at a trough and risk assets are rising. This will all make sense to you shortly, so let me keep going. Many assets just follow the business cycle. I've got here the Russell 2000. That lives in ISM today. This weak economy is why we've got a weak Russell 2000. The Nasdaq lives in the future, which is why it's strong. There's no weirdness about the dichotomy between the cyclical companies and the secular trending ones. They always have this time lag. It's not some broken structure of the market or this is a bubble, that's a bubble. It's just normal. It's normal that the Russell 2000 lives in present day ISM. It's cyclical. So that's where that is. Crude oil. Same. Crude has been weak because the economy's been weak. Crude oil doesn't forward look the economy. What it does is it reflects the present state of the economy. Another way of seeing the economy as it is today is this chart, the number of states with decreasing coincident activity. So, number of states with bad economic data. That's very high. It's kind of in recession territories. When it crosses this 26 level, we're usually in a recession. Do we get a proper recession or not? Doesn't really matter, because a lot of that was priced in last year to the assets I care about, the forward-looking assets of crypto and tech, which I'll talk more about. Next year, well, here we start to see the economic indicators picking up. So the Empire and Philly Fed, the average of those is already showing an uptick. They're crossing that kind of zero level to say, hey, growth is about to come back. The ISM News orders minus inventories, this is a classic business cycle indicator, probably the most classic. It gives you a 3-month lead on ISM and it's screaming higher. It's telling us that the ISM is going to recover pretty sharply. And those recession fears, whether we get one or not, will be in the rearview mirror. Things will be getting stronger going forwards. And I know the last 18 months has been tough for many. Your portfolios and everything you owned got nuked in 2022. It's taken people's confidence away. I get it. Also, people have lost jobs. People's revenues have come down. It's not easy. But what I can tell you is 2024 is going to bring new sparks. The transition from macro spring into macro summer will take us from 2024 into 2025.
In the video, Powell delves into additional leading indicators that, in his view, substantiate a more optimistic economic outlook for 2024 compared to prevailing predictions. Powell anticipates a robust increase in the United States ISM Purchasing Managers Index early in 2024, projecting sustained growth throughout the year and into 2025 as the economy gains momentum. As economic strength builds, asset prices are expected to naturally ascend, further fortifying the overall economic landscape. Powell's bullish sentiment for 2024 is reinforced by the fact that it is an election year in the United States. Following the pattern observed in election years, Powell foresees the Federal Reserve deploying a substantial amount of new credit into the economy. This injection is anticipated to lead to higher asset prices. Addressing concerns about higher unemployment or persistent inflation, Powell asserts that, according to market dynamics, these factors were priced in several months ago, rendering them less significant in the current outlook. The video proceeds with Powell expanding on his perspective regarding liquidity in 2024 and its implications for crypto assets such as Ethereum. Tune in as Powell shares his insights on this subject.
Liquidity. Global M2, simplest form of liquidity, it's rising. It's above zero, going up, full cycle, in play. Liquidity cycle, that is what we want to see. As we get liquidity, it drives assets. More on that in a bit. GMI Total Liquidity Index, that's taking private liquidity, public liquidity. It's the broadest perspective of liquidity we can create, well into positive territory. It's above the kind of 5% when it gets really interesting and liquidity then accelerates. But it's this year-on-year rate of change that matters us most, and it's really going up. Fed net liquidity, you've heard me talk about this a lot, many people on Twitter. Fed net liquidity, year-on-year, going up. It's above zero. The Fed is injecting liquidity. The Treasury will start drawing down on the Treasury General account, the reverse repos trading, and eventually the Fed will give up with QT. Positive. Positive for risk assets. We also have a lead indicator, and this is the kind of detrended liquidity cycle. And here you go, and you can see the forward-looking lead indicator all the way through 7 months ahead. Keep seeing more liquidity. So that's going to be great for markets in 2024. 2024, sure, there'll be some ups and downs, for sure. But it should be liquidity driven, business cycle driven, inflation falling, unemployment a little bit higher, rates coming lower, stimulus should be on its way. More cowbell is the way of the world, and it's the way of the world since 2008, and it will continue as so. Okay, our financial conditions index, it's a great lead, which is why Julie and I spend a lot of our time living in that particular future, which is 11 months ahead of ISM. It actually leads global liquidity by 5 months. And it suggests global liquidity should be, in the coming months, by mid-2024, at 20% year on year. That's a really positive liquidity condition, and that will drive assets. So if we were to price the NASDAQ versus a 20% year-on-year increase by May 2024, as the previous chart showed, would that put the NASDAQ at 17,500 by May 2024? The NASDAQ's actually diverging from liquidity right now, and that's normal at this point in the cycle. So the moment liquidity improves, it explodes higher. That's normal price action, and it may overshoot these targets. I have no idea, but I use this to keep me intellectually honest. Ethereum, perfectly works against a global liquidity index. And again, it suggests that Ethereum may have a really good first half of 2024. The target from using the liquidity indicator would be about 5,300. Again, don't take this as written in stone. It's directionally we should be coming to all-time highs in Ethereum in the first half of 2024. Let's see how that plays out, but it makes me very bullish on crypto assets. Ahead of us lies the monetization of the payments from the COVID cycle. You saw this year in the bond market when they started to try and issue new bonds to pay for some of the interest payments. The bond market freaked out. It's because there's too much debt. And you have to issue an extraordinary amount of bonds. When your interest payments have gone up from, let's say, 1% to 5%, they can't do it. The numbers don't add up. And so something has to change. That something, I think, is they have to bring rates lower, and then eventually they will have to use the balance sheet. And being late in cutting rates is their way to ensure inflation undershoots their target. And I've shown that seems like it's pretty much baked in the cake. And that'll give them the cover that they need to relaunch QE.
Powell asserts that a global economic reset occurred in 2008, prompting major world economies to recognize the stagnation or decline of the two pivotal factors for GDP growth, demographic and productivity growth. Despite this, debts continue to accumulate, reaching 100% of GDP for many economies. To stave off the inevitable, Powell contends that central banks opted to absorb these debts onto their balance sheets and periodically print money. However, he argues that this approach has led to a point of no return, compelling central banks to consistently provide liquidity to safeguard the economic balance. Powell's general bullishness on asset prices, both short and long term, stems from his belief that central banks will perpetually inject money into the economy, sustaining asset prices indefinitely. Yet Powell acknowledges a flip side to this scenario. Traditional asset classes, he contends, aren't genuinely growing in real terms but are merely responding to continuous liquidity injections without experiencing real value appreciation. This, according to Powell, may lead to continuous currency debasement without a corresponding increase in purchasing power. Powell's overarching thesis is a bleak assessment that everything is in disarray, with the only viable solution to the GDP predicament lying in increased productivity growth. This is where he sees the significance of crypto technology and the exponential age, explaining his bullish stance on these asset classes. As Powell lays out his predictions and outlook for the cryptocurrency industry during the bull run, he invites viewers to share their thoughts, comments, and observations on his perspectives in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.